I'm here to interrupt the scroll. Stop scrolling. We're going to talk about Kirkland real estate and how your strategy is probably all wrong. And I can prove this right now with one number. The Kirkland real estate market is finally changing. It's not broken. It's not having a crash, but you're probably missing one of the biggest, most profitable buying windows we've seen in over a decade. We're going to break down the data today, and it's not exactly what you think. The Kirkland real estate market definitely hit an inflection point here in the last 90 days. And we've been seeing this for a lot of real estate markets. Real estate has been affected by these higher interest rates as they have continued to be higher for longer than expected. Two, the political climate where politics, they're fighting back and forth and we don't know what's going on. Are the tariffs on? Are the tariffs off? The government shutdown, all these types of things have started to put stress on all of these local real estate markets. And some of this data starts to look very terrible on the surface. You've seen month of supply absolutely spike up here in the Kirkland market to 3.9 months, which is a massive leap from the pandemic white hot lows of literally less than a half a month of inventory. This signals a profound change for buyers and a return to real negotiating opportunities. And our media likes to overhype everything. They like to call these things crashes, but this is not a crash. This is just simply the great correction. This is what we're calling a return to normal. It's where the velocity has collapsed and buyer leverage is actually starting to happen in certain specific parts of the Kirkland real estate market. The underlying median sales price is really sitting there very stable. And the reason for that overall stability is in King County, that's the wealth that's created by the tech industry. So this isn't a crash. It's just kind of a reset to a new, higher, profitable baseline. So in this video, we're going to, one, go over the data. Two, I'm going to show you where the market is the most stable, what part of the market has the most opportunity, and then also where I'd be thinking about if I was an investor there in Kirkland. And if you're going to get value out of this video and you like seeing data like this, that's just the real data, no spin, please hit that subscribe button. Share this with a person that needs to know it. I'm Anton Stetner. I've been selling real estate here in the Seattle Metro since 2003. My team has closed thousands of real estate transactions. I own real estate brokerages. I do investment projects. I do land development projects here throughout the whole metro. So I'm playing in the game all the time with my own money, number one. Number two, I've been actually looking at this data since 2003. I'm a little bit of a nerd and I'm just sharing that data with you. And for those of you that don't know, I want to walk you through what is happening with the 10-year Treasury. The 10-year Treasury is what sets the interest rate for 30-year fixed debt. It sets it for auto loans, for HELOCs, for student debt, for business debt. If you follow this right here, you can see where debt is going in the future. And if you take a look at it, you can see that the 10-year Treasury has been trending down basically this whole year. And that's why you've seen interest rates start to get into the low sixes. And we know right now that the Federal Reserve is talking about more interest rates coming ahead. The odds of a rate cut here in October, I mean, it's basically already baked in. They don't have a meeting there in November, and in December, the next rate cut is basically already baked in. So expect to get about 50 basis points there from the Federal Reserve, or 0.5. We expect interest rates then heading into 2026 to be in the upper five starting for the spring market. Well, what does that really mean for Kirkland as a whole? It means it's probably going to have a hotter spring market in 2026 than it had in 2025 and in 2024. But let's dig through the data today before we start getting too deep into the future. When you're looking at the median price, you can see the median price is just slightly trending up right now. Median means the middle. Average is when you add them all together and divide by the total. So the middle, aka the median, is less affected by the upper end and the lower end, but the average price is more affected. And I believe what is causing some of these average price spikes right now, or the pull up in the average price versus the median, is because higher end homes are selling and they're selling more expensively, which is pulling that up. So in this example, I am trusting the median more than the average when we're looking at this data. And you can see it's only up 1.3% versus last year when I compare September of 2025 to September of 2024 versus the average is up 6.7. Now understand with the median only being up like 1.3%, but inflation is still 2.5 to 3%. That basically means that prices in Kirkland are flat, or you could even say it's slightly down because it's not keeping up with the rate of inflation. But I would just call prices in Kirkland today basically flat. You see that listings are up 23.3%. These peaks and these valleys is just the normal seasonal use of the data. I like to show you the monthly data versus the fully smoothed out data because it's more real, it's more raw. This next stat right here is kind of mind-blowing, to be really honest. The number of homes for sale is up 68%. Look at that just big spike right there. That is signs that the economy is currently slowing down, that consumer confidence is slowly pulling back. Now, once again, the media likes to characterize these things as a crash. I'm telling you, this is more of the return to normal. You can see pending sales are up 19.8% versus last year. You can see the closed sales are up 16.3, days on market 36. The months of pending supply, this is where it starts to get interesting. So see all that extra supply? This is a returning more towards a normal market. Let's go further back in time. So we go back to 2020, see how the market got hot, but let's go further back. Let's go 10 years. Oh, here's the great financial crisis. So right now, understand that Kirkland is above even 2014 levels. So we are nearing the level of inventory we had in 2012. This is what people are feeling. This is that slowdown in the market. Below 6 months worth of inventory is a seller's market. Above 6 months is a buyer's market. But there are pockets in Kirkland that are currently exhibiting buyer market-like feelings. And that is your opportunity. We've been calling this deal season across the social medias. I'm personally buying a bunch of properties right now. And what I would recommend is that you take advantage of this if your intention is to purchase or invest in Kirkland within the next 12 months. You need to start looking at this data and starting to look for things now because the winter is most likely going to be the best time. And as rates come down, it becomes more affordable, which will bring in more buyers and more activity. And this political uncertainty and this economic uncertainty, as it gets solved, of course, brings in more confidence, which brings the buyers back too. When you are looking for deals or opportunities, as you start to look into a market, there are 3 metrics that you should always pay attention to. Those 3 metrics are active listings, because as inventory grows, buyers have more choices. Days on market, because as days on market grows, it's showing you the market is slowing down. And the percent of original list price. In other words, when a property sells, how much did it get versus its original list price? Let's look at that data right now here in Kirkland. And what you can see is back in 2022, we were having these bidding wars. Let's go a little bit further back. Start in 2020, and anything over 100 is a bidding war. Then we get some, late 2022, this dip right here, that was when the Federal Reserve just massively raised interest rates for, the first time in 40 years. They shot them up like crazy. And looking at this data, you see, all right, in 2024, we had a great spring market. In 2025, it was not as hot. And last month, it was 95.7. That means the average buyer got a little over 4% off the list price in Kirkland. But this is still the tale of 2 markets. There is a market that's really hot, and then there is a market that the buyer's getting the deals in. And as I go through data like this, if you have specific questions, drop them in the comments. Let me know what you're seeing. Are you seeing more homes on the market? Are you seeing inventory rises? Are you seeing price reductions? What are you specifically seeing? And if you're a buyer or an investor who's going to look at something in Kirkland, let us know, because we're talking about the whole city and the zip codes, but we need to dig into the neighborhoods, into the communities to make sure that you're properly positioning your listing, properly positioning your offer in order to maximize that opportunity. Right here, we're looking at another metric that's very interesting. So you see the market being white hot. This is the average shows to pending. You can see the market cooling because the number of average showings to go pending is going down, and the number of showings on average is going down. So the average listing got 5 showings in Kirkland last month in September, but it took 14. So in other words, in order to sell your home, you had to get 3 times the market average in order to do that. What that's telling you is you've got to be the best condition, the best price, properly positioned inside of the market, and have some amazing marketing and storytelling to go along with that. If you are all of those things and the market is not responding to your price, then unfortunately at the end of the day, it is the price of the property. Once again, we'd have to go into specifics for your specific property to understand where it's sitting to be able to answer if this is actually you and you need a price reduction. Next, I want to kind of dig through the tail of the 2 different markets that we're seeing in Kirkland. I'm going to show you the data right now for the 2 main zip codes. And I wasn't kidding when I said that Kirkland is really the tail of 2 markets that's happening. And we're talking about the 98034 versus the 98033. In the 98034, you are seeing the median sales price shoot up versus the average sales price go down in September. And look at these year-to-date numbers. What this is showing you is that basically, let's just call Kirkland's price around 1.4. And that 1.4 is unbelievably stable right now, just unbelievably stable. And it's forcing up appreciation. And so if I'm a buyer and I'm buying around the median price there in Kirkland, not the upper end, not the ultra luxury, but the median price, I feel very stable and comfortable inside of this market. If I'm an investor making an investment at or below, and of course, preferably below the median, you guys know that. What I'm looking for though is I'm looking for that stability, that opportunity. You see this also reflected right here in the percent of original list price received, that year to date, it is still 101.4. That's showing you how resilient the market is and how much demand there is right there in Kirkland. But when we flip it over and look at the other zip code, things change. Now, when I look at the 98033, when I compare month to month, so September wasn't that bad. That's showing up 7.2% on the median and 16.8. That's not what's concerning. What's concerning here is the fact that the median price is showing only 2.6%. So this is that ultra luxury market there in Kirkland. And the average price is actually showing a negative number. It's not even keeping up currently with the rate of inflation. This is where the deals are happening. If I'm shopping in that ultra luxury market, if I'm an ultra high net worth individual or a high net worth individual, and I'm purchasing, what I'm going to recommend to you is you need to negotiate stronger and harder and ask for more off of the list price. You've got to get money off the list price, or you've got to get some type of terms or concession. You can see the market is flat there, and part of it is slightly declining. Going into the winter, like we were talking about, that's deal season. What's going to happen or continue is the sellers who remain on the market, because it's traditionally slower during the winter. And you traditionally see that people will pull their listings off of the market. If they remain on the market or near the market, look at that as to be a sign of motivation. That sign of motivation means you should make stronger, more firm offers and try to get more off of the list price. Because I do believe by the spring market, because I do believe the current Trump administration, the Federal Reserve, the stock market, everything is pushing right now towards lower rates. And lower rates mean the real estate market speeds up, not just in Kirkland, but throughout the whole Seattle metro. Now, for my investors, my house hackers, they're in Kirkland. The people who want to force in appreciation and equity, this is for you. Kirkland recently passed their middle housing ordinances. That's House Bill 1110. They also passed their ADU codes. That's House Bill 1336. And when I say House Bill, I'm talking at the state level. And what that means means now is single family lots in Kirkland now all have to allow duplexes or fourplexes, and some that are close to transit may allow up to 6 units. And homes that are on a large enough lot that don't have CC&Rs that prevent something like this, that's covenants, conditions, and restrictions. I almost forgot, been doing this forever. If they don't have CC&Rs that prevent additional dwelling units, I do believe that the ADU/DADU, detached accessory dwelling unit, is one of the absolute best plays that you could be making here in Kirkland. So here's what I want you to look for if you're interested in this investment strategy. One, you need to find an old home that is a tear down that you could basically buy it for almost land value, scrape it, and then build a duplex, a triplex, or a fourplex in its place. Or two, find a single family home that's sitting on a larger lot. So I'm talking something that's greater than 6,000 square feet that has a way down one side of the property to be able to access the back of the property. We've been doing DADUs all around the north end of the Seattle metro right now. I'm currently building a bunch for myself. This is a great way to force in equity and to create opportunity. And if you can get 2 on that property, even better. But even 1 will work in Kirkland because the average price is so high. And understand that this is probably one of the safest investments that you can make. The reason I say that is if the average and the median price is both around 1.4 and you build a ADU or a DADU on a property, and that is below that median price and the average price in the area, it's going to be very protected. It's going to be in very high demand, and you're going to get a really high price per square foot, aka return on your investment. I also want you to understand that the long-term pipeline in Kirkland is unbelievably low. So this is the massive opportunity. The city's growth targets call for 13,200 new housing units by 2024 to accommodate the population and job growth, which was adopted by Kirkland as part of their 2044 comprehensive plan. And this concentrates mostly around its urban centers, namely Totem Lake for major redevelopment and the Northeast 85th Street Station area and downtown Kirkland. So those are probably the areas that are going to get the most of this density, but I think you should be doing the ADU DADU play or the middle housing. In summary, what do I want you thinking about good old Kirkland? One, there's opportunity in the ultra luxury market. You can see this in the list to sales price ratio that you're seeing throughout Kirkland. If the seller stays on the market through the winter, I would assume they're motivated. I would assume that they're going to take a lower offer. Two, if you are buying near the median price or near 1.4, your price should be very, very insulated because it's showing massive stability. Three, the market is simply returning to normal. This slowdown is normal. For the agents and brokers that haven't been in the business a long period of time, welcome back to reality. You have to work really hard. We've always been working hard. This is the best game ever invented. You can't sit there and just wait for something to happen. For the sellers who are thinking about selling, I'm going to recommend you wait unless you're really motivated, and also unless it depends on where you're going to move to, if that one's going to appreciate or change more. But right now, the way the data is looking, my bet is the spring market's going to be a lot better than the current winter market that we're heading into. And then last but not least, I think your best opportunities lie in middle housing, aka duplexes, triplexes, and fourplexes, where you go scrape the existing home. And the easiest one for you to do is to simply find a home on a large lot and build an ADU in the backyard and force in some equity for you. I'm Anton Stettner. Thanks for hanging out with me and chatting about the Kirkland real estate market. If you guys have questions, please drop them below. If you need help in Kirkland, you can reach me and my team at resg.com. Also, feel free to hit us up in the comments. And thank you for listening.